Okay, let's talk about savings in October 2025. In a moment, I will take you through the top paying accounts right now so you can get the most for your money. But before that, as ever, I'm going to take you through some of the latest news and new products, some of the things that you need to know about to, again, make sure you are maximizing your returns. First thing I want to talk about is the base rate and current inflation rate. These obviously are really important when it comes to savings. The inflation rate, well, you want to make sure your savings are getting higher than the rate of inflation as much as possible. And it is possible right now, so you really should be doing that. Inflation is currently still sitting at 3.8%, so it didn't move from the month before. Still an expectation that the next rate we get this month in October, that it could be around 4%. Hopefully that is the peak, and then it will start coming back down again. But it does look like the average for this year is going to be 3.5%. And again, it will take time to go back to that Bank of England target of 2%. But the big thing here is to make sure you are getting above 3.8%. So when I go through the rates later on, they're all going to be above 3.8%. And if we're looking at 4% next month, again, that's really, I would say, the minimum you want to be going for. And it is possible to get this, as you'll see. Now, this brings us on to, very quickly, the latest Bank of England decision on the base rate from a couple of weeks ago. Nothing changed, which is why we didn't do a separate bit of content telling you about it. We did an article on the website, but didn't do a video, didn't do a podcast for it because nothing had changed. But it is worth talking about what it might mean, the current inflation rates, the other kind of things going on, what that might mean for future base rate cuts, at least for this year. And it's looking very unlikely that we will see another cut this year. There is still a chance of it at the next meeting in November. There is still a chance of it happening at the meeting after that in December. At least one cut in those two meetings. Incredibly unlikely that we'll see two more cuts, one at each of those meetings. But I think at the moment, let's just work on the basis that it won't happen. But as you know, when I tell you this every time we talk about the base rate, things change all the time. So we could well have loads going on. But I think, if there is going to be a cut this year, it'll be one, say, either in November or in December. But again, looking quite unlikely that is going to happen. And then beyond that, in 2026, again, the current market predictions are maybe just one or two more. So we're at 4% right now. Maybe this time next year, we could be around 3.25, 3.5%. Who knows, okay? But it's not looking like a massive cut downs. As we've always said, you're never going to go back down to those rates, or not never. It's not going to happen anytime soon unless something massive happens back to those really, really low rates we had before. So if we're thinking about that 3.5%-ish over the next year or so, based a lot of the savings rates have already taken into account predictions that saw maybe a faster cut to those rates. So I would imagine that on the whole, we're not going to see a huge amount of movement downwards, not massive drops down from where we currently are on those rates. But of course, unless a rate is a tracking rate, which literally follows the base rate, and they can change whatever they want, however much they want, and there will be some movement. Sometimes providers will want to get some of your money, so they'll offer higher rates, boost what the current offering is to get your money in, and then withdraw that. And other providers might have been doing it at a much higher rate for a while for that purpose, and now suddenly drop down a lot more because they've got your business. But broadly speaking, that's where we are on those things. Now, another reason why it might be quite unlikely for us to seeing a huge amount of change in the base rate for the rest of this year isn't just down to inflation, isn't just down to other economic growth factors. It's also the fact that we are going to have the budget on the 26th of November this year. This is where Rachel Reeves will announce all the big financial policies and plans for the next 12 months for this government. Now, one thing that we will expect to hear something on is ISAs. Now, as you guys know, you've been following what I've been talking about for a while now, that in the summer we were expecting this ISA announcement to take place at something called the Mansion House speech in the summer, and that didn't happen. It was paused. So we never knew exactly what they were planning to say, and we don't know that that's because they aren't going to do anything anymore. They might say, right, what we thought we might do, all those rumours aren't going to happen. But I would imagine they are going to do something, even if it's not quite as severe as what was talked about before. And I imagine if they are going to do it, they will announce it at the budget. Obviously, I'll keep you updated. Any kind of rumours that we do here coming along. I'm not a big fan of doing too much on rumours because often it's just a bit of scaremongering. But anything that might be worth talking about, I'll let you know as we hear those things. As it stands, the last kind of thing we really heard about when it came to cash ISAs was really about reducing the annual allowance, the amount of money you can put into the cash ISA aspect. Obviously, a lot of pushback on that, particularly from building societies, but also many others saying, look, this isn't great. It's not going to be something that will make people move from saving into investing, which is what Reeves and the Treasury want people to do. It's not going to do that just by reducing it. They'll just put that money in taxable savings accounts. A cynic could say that that means that actually that wouldn't be so bad for the government, because if people started suddenly paying a lot more tax on interest that they've earned on their savings, then that's more for the Treasury to put aside and put elsewhere. But anyway, I'll keep you updated as we know. Now, one thing that we don't expect to hear about in the budget in, 7-8 weeks now, 2 months' time, is around reform of lifetime ISAs. Again, we've covered this previously and talked about this before whenever I've covered them. They are great accounts in lots of ways if you are saving for your first home, but there are some flaws. And the big flaws are if you don't use it for your first home, or you need to take the money out before retirement, age 60, there is a 25% penalty. Now, that 25% penalty doesn't just take away the 25% bonus that you get on money put in. It also takes away around a sort of 6.5% extra fee. So you're losing money. So this is obviously not great as a savings vehicle for a lot of people, because, well, if you can't buy the first home or you need it before retirement, you're going to lose money by using this account. So that's a real problem. I'm hoping they would sort of change that, at least make it you should lose the bonus rather than having that effective penalty on top. The other big problem with them is that the house buying limit is across the UK is £450,000, which is fine for most of the country. But in London and the South East, that can be an issue, particularly when you take into account that so many people are buying houses at a later time now, later age now, and therefore they might have families. Therefore, they might want bigger houses, particularly if they're buying together. So that £450,000 limit can be an issue. If it costs more than that, you can't use it. Now, these were some of the things that were part of a Treasury Committee review with the recommendations put through to the government. The government has responded recently, and they've basically said that they don't think these things are going to change. They think that 25% penalty, and the wording here is the withdrawal charge ensures that the LISA has been used for its intended purposes, home ownership, or for first-time buyers, or for later life savings. So they don't think that should change. They also felt that 450 cap was fine. And the other thing they dismissed as well was this call for lifetime ISAs to not count towards universal credit assessments, because if you are eligible for universal credit, how much you get will depend on how much you have in savings, okay, which is fair enough. But if you've got a penalty charge on lifetime ISAs, then you actually, to access that money, which universal credit assessments would say you've got savings, you can access it, well, you're taking a massive hit to take that money out. So it looks like nothing's going to happen there. The government have not responded to those. Well, I've got a handful of new products to tell you about right now. Some of them best buys, some of them aren't. One of them is the first cash ISA from Hargreaves Lansdown. Now, they have been obviously stocks and shares, ISAs and other investment products for a long time. They've now moved into the cash ISA market. The rate at the moment is nothing to shout about. It can be beaten in lots of other places, but one to keep an eye on. Another one is a change from Sidekick. They are offering something called a multi-shield account. And what this does, it's quite clever in lots of ways. It was simple but clever. It boosts your financial services compensation scheme protection from £85,000 to up to £255,000. And the way it does that is it basically, you put your money into this Sidekick multi-shield account, and then it basically spreads that money out across different providers and give you that increased protection without you having to manually go in and open up different accounts and put your money into those different accounts, which obviously you can do if you want to. But this is a nice way around it. Obviously, it's aimed at people with a lot of money to do this. Now, that could well be people who just have a lot of wealth. It could be people as well who are thinking in the short term, oh, I've just got sold a house, I've just got some inheritance. Maybe I'll put that into these accounts just to protect that money, which kind of makes sense as well. But don't forget, if you do have that short-term money, the normal financial services compensation scheme protection does cover you up to £1 million for 6 months for certain circumstances, such as those things I've just mentioned now, such as inheritance or selling a home. So again, you might not necessarily need it in those instances. And the reason why you might want to be using a different account for the short term on those large sums, or by mixing and matching and putting your money manually into different accounts, is that the rate with the Sidekick multi-shield account is very beatable. Although you'll see the headlines of 4.48%, which isn't, that only includes a 1% bonus on the first for 6 months. So really, you're going to get a lot less than that, which again can be beaten. Plus, that bonus is only on that first £85,000 saved. So if you're someone who wants to keep things simple and you've got a lot of money, then certainly worth having a look at this. But if you've got the time and the inclination, shopping around, as we'll see later on, will get you a better return. Quickly, a new account here, a new regular saver worth talking about. This is from Darlington Building Society. This one pays 6%. Now, what's good about this one, much like the Monmouthshire Building Society account I told you about a couple of months ago, you do not need a current account or an existing relationship with this building society in order to access this account. Yes, there are higher paying ones, which we'll get to later on, 7%, 7.1%. But to get those, you do need to open a current account. Nice and simple. You can apply, open this one online and get access to this. There is a cap of £250 a month that you can put in. If you put that maximum in every month for a year, then the interest would be about £98. So definitely worth having a look at this one or that Monmouthshire Building Society one. Incidentally, just to let you know, the 7% paying Monmouthshire Building Society account I told you about last month, that one has now already closed down to new applicants. So hopefully you got it if you're eligible while you could. Now, a couple of offers to tell you about before we get into the top savings rates. First of all, this one ends on Tuesday, the 30th of September at 12 o'clock. So you don't have long at all to get this one. I did talk about it last time, but I'll cover it again. This is a £100 offer from Raisin. You have to be a new customer. You have to save £10,000, so a lot of money, for 12 months with them. You have to go via a link over at becleverwithyourcash.com, I should say, when you do this, and enter the promo code. But again, it's all over at becleverwithyourcash.com. If you do that, then a £100 bonus will be added on. So that means the best 12-month fix right now is 4.33%. Factor in on a £10,000 balance, another £100 is basically a 1% boost. So you're going to get, in reality, 5.33% on that. Now, obviously, if you save more than £10,000 in that account, then that will obviously reduce that the value of that effective bonus. Still £100, but the percentage addition on there will change. But remember, you have to go via the link on Be Clever with Your Cash by midday on Tuesday, the 30th of September. Now, there is a chance they'll extend it. These things have been extended before. And if that has happened, you'll see those details reflected over on the website. The other offer to tell you about is only going to be open to some of you. And it relates to Chase. Now, Chase, in your app, if you already have this, it's worth going to the Save and Invest tab or the Rewards Hub section, either of those ways. Click on those. And if you're eligible for this offer, you will see something coming up saying about a 2% boost. This 2% boost will last for 12 months. You'll have to open up a new savings pot for that. Obviously, you can put new money into there. Now, that tracks the 2% plus the underlying rate, which currently tracks the base rate minus 1.5%. So with the base rate currently at 4%, that means there is a 2.5% rate on the account plus 2% adds up to 4.5%. So that is pretty good one to go for right now, as you'll see when we go through the best rates. But sadly, not all of you can get it. Personally, I don't see it on my app. And when I asked Chase about who can get this, they just said selected customers. So there's no way for us to really understand the eligibility criteria here. Just have a look and see if you can get it. Right, it's time to take you through the top paying accounts for October 2025. Remember, as ever, rates change, right? The ones we're going to take you through right now are the top paying ones, just a selection of the accounts out there. But it could be in a few days, in a week, things are different. And new ones come along, or some of these might no longer be available. So you want to go to becleverwithyourcash.com/savings. That will take you through to our latest easy access tables. And once you're there, you can click through to our other comparison tables looking at regular savers, fixed rate table savers, ISAs, lifetime ISAs. The whole lot are on there. So any changes that do come along, that is where they will be. Let's start off with, I think, some of the best paying rates out there for your normal money. You're going to have an easy access cash, but they do require you to open up a current account or already have a current account with these banks. Top one, as always, is the Santander Edge Saver. Big fan of this one. You can get 6% for 12 months on a balances of up to £4,000. Now, after 12 months, you lose a bonus. That bonus for new customers has increased now to 2.5%. So the end of the year, it will drop down to 3.5%. But what you can do, which is what I've always done with this account, close it down and open up a new one, and you get that bonus again for 12 months. So hopefully you'll be able to keep getting a really high paying rate on balance of up to £4,000 year after year. Incidentally, there is a new Santander Edge Explorer current account, which also gives you eligibility for this Edge Saver. So either open up the Santander Edge current account or the Santander Edge Saver. Both do have fees though, so you want to take that into account. But hopefully the other benefits and perks you get with those two accounts will more than make up for paying for that. And then you're just earning that 6% on the savings. You can also get a higher rate with a Nationwide Flex Direct current account. That is a 5% rate for 12 months on a balance of up to £1,500. But that is for new customers only. So if you've had a Nationwide account before, then you won't be able to, also a Flex Direct account specifically before, you won't be able to get this rate. Instead, there is a decent switching offer from Nationwide going on right now worth £175 as well. So combine the two, it is an attractive account. And finally, we have the Chase Saver. This one is only to new Chase current account holders. Did talk about before, some customers, existing customers might be able to get a boost, but if you are brand new to Chase, then you definitely can get this worth 4.5%. Now that includes a 2% bonus for 12 months. Underneath that, it is a variable or a tracker rate one, so it could go down as the year goes on, but that is very competitive. And they've also just launched a £100 switching offer. Got details of that over on the website, and I'll cover it on YouTube and the podcast probably later this week. So they're the ones which require you to have a current account, which could be maybe a bit of a faff. And say with the Santander and Nationwide one, there are caps on how much you can actually earn that interest on. So if you want less restrictions or fewer restrictions, and you don't want to open a current account, then my top picks are as follows. And the highest paying one at 5%, again, as you can see, hard to get that kind of rate, is from Kahoot. Their Sunny Day Saver pays 5% on balances of up to £3,000 for only 12 months. But for a lot of people, £3,000 is still a lot to have in savings, and that 5% rate is great to have. And after a year, yes, you'll lose that rate, but you can always open up a new one if they still offer it and hopefully continue to get that. So it's not going to be massively admin heavy. After that, though, is a big jump down. For these accounts with no restrictions, you're looking at 4.35% as the best one. This is from Snoop. Instantly, if you do open up the app via a link that we have over at becleveryourcash.com for the first time and link an account, you can also get a £5 Amazon voucher. So it's a nice little extra if you're going to go down this route and get that savings account with them. After that, we've got Darlington Building Society offering 4.31%, but that only gives you access for withdrawals once per year. So it's limited access rather than easy access there. And finally, United Trust Bank, 4.3%. There are a few other accounts out there offering 4.3% as well. But as you can see, big drop down from what we've had previously. But still, as I mentioned earlier on, you can beat inflation with your easy access savings. So they're definitely one of these or similar accounts that should be near the top of your list. Now let's talk, while we're sticking with easy access, let's go on to ISAs. Now the top paying one here, the rate changes quite a lot, but it's still correct at time of recording this. It just went up last week. Trading 212 offering 4.51%. This is for new customers only. If you've already got a Trading 212 account, sadly, when the bonus that's within that has expired, you'll get a lower rate. So only new customers will get that. And also a new rule that's coming in is that interest is only going to be paid on balances in that financial year, or the bonus, I should say, is only paid on balances within that financial year. So if you put money into it this year, you'll get that full rate, the bonus there. But if you put more money into it from April, then you'll only get the interest rate minus the bonus. So it's something to bear in mind there. Plum, 4.37%, also new customers, and there are restrictions there on how often you can withdraw cash. Then we've got a normal cash ISAs, Darlington Building Society, again, 4.31%, also only one withdrawal a year, or the Family Building Society, 4.3%. So if you are not eligible for those new customer deals elsewhere, then they're certainly ones to be looking at. Also talking about easy access, it's worth mentioning notice accounts, because notice accounts can pay a little bit more, and as long as you plan ahead a little bit, they can be worth considering. The top paying ones right now, Oak North will give you 95 days notice, so 3 months at 4.51 rate. And Oxbury, if you're willing to give 6 months notice or 180 days, it's 4.55. So again, decent rates available for you, but you do have to plan ahead. You have to say, I want that money in 3 months or in 6 months. Now, as we move on to fixes, remember, these are just the top ones available. There are other options, and there will be changes all listed over at becleverwithyourcash.com/savings. The best 6-month fix is Aldermore, 4.5%. Best 9-month fix right now is Atom, 4.3%. The best 12-month fix is Oak North, 4.45%. Or if you do this before midday on the 30th of September, you can still get that £100 bonus from Raisin, and National Bank of Egypt are currently the top payers there, 4.33%. As I mentioned before, giving you the equivalent of 5.33% if you do save that 10 grand for a year. Now, if we move on to 18 months, the top paying fix here is Synergy, 4.25%. On a 2-year fix, it is JN Bank, 4.43%. Also JN Bank on a 3-year fix, 4.44%. Also JN Bank on a 4-year fix, 4.4%. But the best 5-year fix right now is Birmingham Bank, 4.53%. And obviously, you put your money in these accounts, you are locking them away. You cannot get hold of them until that period is up. With a fixed rate ISA, the rules are slightly different because you can take money out early, but you will be paying penalty in the terms of interest. So ideally you don't want to, but there is a bit of a backup there. You also do get a slightly lower rate. So the best 12-month fixed rate ISA right now is Chetwood Bank, 4.28%. We have Bath Building Society for a 2-year fix at 4.15%. We have Darlington Building Society on a 3-year fix at 4.2%. United Trust Bank on a 4-year fix at 4.1%. And Chetwood Bank via Hargreaves Lansdown for 5 years at 4.26%. Sticking with ISAs, it's very quick to talk about lifetime ISAs. Top paying one here is Moneybox, 4.6%. Again, a lot of these ones do have restrictions in terms of new customers and bonus rates, but certainly worth looking at that. There are similar ones out there, these apps competing for the top rate on lifetime ISAs. And let's end on regular savers. Again, my favorite accounts because they pay the most and they get you in that savings habit. The top paying one is from Zopa, still 7.1%. You do need the Biscuit by Zopa current account for this. Just below this in terms of rate, but my personal top pick is the First Direct regular saver. This one pays 7%. The reason I prefer it to Zopa, it is fixed, so it won't change in the 12 months you've got. So you get a little bit less in interest, but you're guaranteed to get it. Again, requires a First Direct current account, and there is a switching deal going on for First Direct right now. And then Co-op, also 7%. That one is variable again, requires a current account from Co-op. There is a switching deal as well. But if you're new to all of those, I would go First Direct, then Zopa, then Cooperative Bank in that order. And again, we talked about this earlier on, but very finally, some regular savers that don't require you to have any loyalty or any current accounts of anyone else. Monmouthshire Building Society, 6%. You can pay up to £500 a month into that account. Or Darlington Building Society, also 6%, although it is a lower £250 a month that you can pay into it. They are the top savings accounts for October 2025. Make sure you go to becleverwithyourcash.com/savings to see many, many more rates and all those updates. My name's Andy Webb. Thank you so much for watching. Check out these videos here for more ways to make the most of your money.